I don't know about you guys, but I am so tired of all the negativity and all the headlines being negative to recession, to inflation, to now earnings being marked down. And honestly, I am just looking desperately to find some positivity to start our new year in 2023. And so today I did a little research and actually I did find some good news to share with you guys. First thing is, did you know that the startling fact in Business Insider written yesterday that 94% of the S&P's losses came in 5 of the trading days this year in 2022? Interesting. And the worst of those trading days actually fell on September 13th when the CPI report August was released and it came in hotter than expected. That being said, investor sentiment right now is worse than it was during the 2008 financial crisis as reported from Business Insider. So if we're getting close to or scraping the bottom of where sentiment lies, shouldn't we start to come off that bottom at a certain point? Well, a couple of contrarian viewpoints, one starting with Professor Jeremy Siegel of the Wharton Business School. He recently noted that we could see a surge in almost 20% over the next 6 months in the stock market. Imagine that. So Professor Siegel was quoted, "I believe the earnings outlook for next year can remain more robust than feared, and even if there is a mild recession." He later went on to comment, "Improved productivity could support larger profit margins and low real interest rates today by historical standards should underpin higher stock valuations." There's a thought. Also, Tom Lee of Fundstrat is defending his bold call on zero Fed rate hikes into 2023, a bullish call at that, being that we've already seen a lot of disinflationary events occurring in both the housing and stock market. And lastly, one of my favorite investors, Jeffrey Gundlach of Double Line Capital, told CNBC that he predicts by June that the CPI will be down as far as 4.1%, another strong bullish signal heading into 2023. So from where we've come in August to where we're at currently heading into 2023 with inflation, we've seen about a 200 basis point retracement, and I believe from Gundlach, Tom Lee, and Professor Siegel's all remarks would all reinforce the thought is if this continues to be the trend, we very well could see the Fed possibly pause rates heading into a midpoint in 2023, which would create a bullish event. Now believe me, I am wanting to remain optimistic and positive. I will still trade defensively with out-the-money calls and writing some collars, but I think moving into the next year, there could be some optimism to consider when making some trades bullishly.